I want to get into the sectors in a moment, but first, it does feel like sort of a historic day in terms of how much we were down on bad news for inflation earlier and how much we're up and what that tells you and what you're seeing in the levels.
Well, absolutely. I mean, these big reversals, this is called, an outside reversal day. We'll see if it closes here. I think it will. Good volumes, good breadth. And I think it's a reflection of sentiment. Sentiment has really been one of the primary bullish or more persistent bullish attributes of this market. And we had a pretty low volume decline here over the last 2 weeks. And the sentiment has been as bad as I can remember it in a long, long time. So I think really the stage was set. And, one of the things that we try to remind clients about sentiment is that sentiment's a reflection of the concerns du jour, right? And that is the Fed, that's inflation. And so if you have bulls as low as they are here, it really means that usually, historically, the concerns, at least temporarily from a tactical perspective, have been relatively discounted. And that's always the challenge in this business. This is 3D chess. You have to worry about not only what's happening and likely to happen, but are people positioned for it? And I think people were positioned pretty bearishly coming into this number.
Okay, so let's talk about what you like. I found this interesting in your notes that restaurants are one of your favorite groups because it's a group that's been hit pretty hard on concerns about a pullback in spending. People are still eating a lot at home, and they're spending big to do that with these high food prices. Domino's out today. That stock is rallying nicely. Why do you like the group?
It just looks good technically, and honestly, from a relative perspective, relative strength perspective, it's been leading, particularly in the discretionary space. And the reason, as you point to, restaurants are important. They really are a bit of a window into what's happening to the consumer, but discretionary broadly is important because when you go through and look at historically sectors that lead the market, particularly after a growth trough or after a bear market, discretionary is usually not always number one, but it's usually in the top three. And so we pay particular attention to what's happening in discretionary on a relative basis. And I'm encouraged that the relative performance of discretionary has held up pretty well above their lows that they made at the beginning of the summer. So even though the news has incrementally felt like it's gotten worse, the discretionary performance has held up pretty well here.
Wanted to also highlight industrials because you've noted some strength, even with some of the headwinds that these companies are facing, like a global slowdown, strong dollar, et cetera.
Yeah, I mean, look, it's not that I'm building some bullish narrative. I'm just reporting what the market is telling us, which is the relative performance of the industrials, particularly the machinery names, the aerospace and defense names, has been really, really resilient here. And we look at it on an equal weight basis, so we get a better flavor of what's happening underneath the surface. You're not as dominated by, a few big cap names. And, I would say probably the biggest head scratcher here is just how well this group has done in the face of a strong dollar, in the face of higher yields, as you point out. Keep in mind, real yields are well above 150 basis points here. That historically is a point that has choked off any type of recovery or any economic activity for that matter. So it's really encouraging to see that the relative performance of industrials and, frankly, discretionary has been able to hold up in spite of those very tight real yields.
Jeff DeGraff, thank you for joining us.
Thanks, Sarah.
With some of the notes on the charts. Appreciate it.